Hey everyone, welcome to another episode of Cognitive Dissidents. As usual, Rob Larity and I are here for our weekly podcast to talk about what's going on in markets and other nerdy things that are occupying our minds. A quick apology at first, I'm on the road in Europe, so I don't have my normal microphone set up, and I'm not so sure how the audio quality is. I'm sure that Jacob, who is confusingly the producer of this podcast, also my name, of course, will get on me for that. So if the audio quality is not what you're accustomed to, don't worry, and it's not Jacob's fault. It's my fault for not having a microphone that traveled well on this trip, and we'll be back to the NPR level sounds soon. But in the meantime, the content's really good, and we hope you enjoy it. Cheers. All right, Rob, it's been another, would you call it a crazy week? I guess I would call it a crazy week when Target goes down 30% or whatever it's down this week in the ensuing bloodbath that happened. So I know you've got some stuff on your mind there, and I haven't heard what's on your mind there yet because I've been in La La Land here in Switzerland. So tell me what you're thinking about in terms of Target and what's going on in the U.S. market in general.
Yeah. Well, it's funny because when we talked last week, you said that it felt like a punch in the gut and how am I feeling? And at that time, I could sympathize with the people who were feeling quite bad. But to be honest, yesterday I started looking at the markets and am feeling very different and very bowled up to be. This is not investment advice, by the way, but there's definitely a change that's happening. So you mentioned Target, and I think that's an interesting topic to focus on because the real issue here, and this is something that I think we talked about on the first podcast we did a few weeks ago, but certainly we've been writing about it for our clients at CI and for our hedge fund clients at Off Wall Street since the beginning of the year. And that's just this notion of, there's too much inventory on the balance sheets of a lot of these companies. And we've been talking about 1948, 1949 as the corollary you want to use when you're thinking about the current environment, because then, like today, there was a huge consumer boom that took place against the background of supply shortages, because Europe was mostly offline after the war. And then also you had this enormous buildup of inventories on the balance sheets of these companies. And as the demand cycle turned, you had an inventory liquidation. And that's what we're starting to see now. And the market is recognizing that. So Target, for example, had too much inventory on its balance sheet. And now it needs to liquidate that. And that has a huge impact on margins. It's exacerbated, especially not to get too nerdy up in here, but from an accounting standpoint. So it's funny to see the difference between companies that have FIFO inventories and LIFO inventories. Do you know the difference between those?
I do not. You should definitely explain that.
Oh, sorry. So FIFO is first in, first out, which means as you buy inventory, you mark it on your balance sheet. Or I should say, as you sell things, the inventories that you acquired first get run through your P&L. So in short, in an environment where prices are suddenly spiking like they have been over the last year, FIFO companies are selling the cheaper stuff at today's prices, according to the way they record their books. So their margins look extraordinarily good. And then they get whacked on the other side because then as demand rolls over and prices roll over, you're selling the more expensive later stuff at the lower prices. Does that make sense? Is that kind of a...
Yeah.
Okay. So a lot of retailers do report under FIFO, and now they're, as inflation comes off the boil, they're going to really feel the pinch. So so that's a kind of what's driving markets now. And when we talked last week or 2 weeks ago, we spoke about some of the groups where investors had been hiding were starting to fall apart. So at that time, we talked about utilities and things like that. And now this consumer staples group, all of the boring companies, Walmart is a very boring company. Everyone has been hiding in this because they're terrified of tech. They're terrified of anything with any sort of volatility or beta to it, growth. And now, as we say, when you're getting toward the end of a move, they take, as investors are hiding in one group after another, each group, one by one, gets taken out back and shot. And now the consumer staples just got shot. And that was pretty much the last man standing. Um, so,
And just for the
uh,
record, Rob, you're feeling bullish, right? That's what you said.
well, I am feeling bullish, and let me tell you let me tell you why. Because if you look at the underlying market dynamic now, everyone's so focused on Staples and Walmart and, oh my God, Target, blah blah blah. Um, Most of the other stuff has looks like it's already been bombed out, and none of the kind of junkier or tech-oriented stocks have been making new lows. So like the microcap index, for example, has been outperforming the S&P for the last few weeks. And that's weird. You shouldn't see that in a risk-off environment. The microcap index are the smallest, usually junkiest stocks in the market, whereas the S&P is the blue chip aristocrats.
Mhm.
So I see that. I see Chinese tech companies not making new lows, despite companies like Tencent coming out yesterday and reporting really bad and disappointing numbers. Um, so I see these divergences starting to emerge, and usually, to talk about the last group getting taken out back and shot, that can be a sort of catharsis. Um, because it sets the table for, that's the last leg to drop. Um, and then you really have a good risk reward uh, on the other side of things.
But so where do we go? We should also say, I think. I mean, I saw that Chile was doing well amidst it all too. Maybe we talk about that separately later. But so now that we've had a reset, I mean, where does it go from here? So once everybody has been shot and there's nobody left standing, who gets Frankensteined and reanimated first?
Well, I think that's a tricky thing to answer. You mentioned Chile. Chile and Brazil have done very well in the last few weeks, even though commodity stocks, for the most part, have been getting um, hit, as we talked about a few weeks ago.
Mm-hmm.
Um, Europe is holding up okay. Japan is holding up remarkably well. So,
Mm-hmm.
it's funny because people think about the global market and they assume that everything kind of moves together. But really, the US has been such an outlier in the longer term, obviously, because you've been mired in decade long bear markets in many of these international equities. But more recently, I mean, the US was such an outlier on the upside, and a lot of these international markets had already been bombed out, and they were holding up really quite well throughout all of this. So that is where I would be focusing a lot of attention, is picking the right countries, because once that overhang from everyone dumping their U.S. stocks passes us by, and I think, at least in the short term, even if we are in a bear market, we've veered way too far into the fear territory for for the near term future. Um, I would be looking to try to find which countries have good prospects, have been durable and holding up, because if you get a tailwind or a rebound in risk assets more broadly, those are good times to be trying to pick up these things for the long term.
Yeah, I'm in Europe this week, so I've been a little bit distracted, and I hadn't actually looked at what the dollar and yen was doing until you were talking just now. And you're right, the yen has sort of turned it around. I mean, it was like literally last week, I feel like, when I was on Twitter, like all of FinTwit had finally discovered that the yen was A, a currency, and B, was weakening on the dollar towards 130 and predicting, imminent catastrophe. And now it seems to be kind of coming back from the ledge, not on any news that I remember happening this week.
Yeah, and that's a good point, because if you look at dollar yen, it's been really tightly correlated with long term US Treasury yields until very recently.
Mm.
Um, and that's when you're looking to time things, whether it's medium term or long term, generally what you want to do is you want to look for divergences in relationships that previously held and start to break down. And that's another thing that's really caught my eye in the last 2 weeks or so is, US equities, especially, big cap equities, are making new lows, and yields are no longer making new highs. And the US dollar is no longer making new highs, which is a real change from what we've seen before. Because the narrative before was, oh, the Fed is tightening monetary policy very aggressively, yields are rising, everyone is crowding into the dollar because that's, the interest rate differential is widening to new highs. And that narrative appears to be breaking down, which is really noteworthy. And, I think positive for international markets for sure.
Yeah, it's funny when you were talking about how we were just cycling through sort of all the different sectors and the consumer defensive being the last one standing. I feel like we've cycled through every single major media narrative about markets too in the last 4 to 6 weeks. So I mean, like all of these media narratives seem to have a fairly short shelf life, but I'm kind of curious where people are going to go next and what story they're going to start telling themselves next and how long it's going to last. You Oh, yeah. Did you want to say something about that?
Well, on the subject of narratives, let me jump on one of my little hobby horses here. So
Please do.
I can't tell you how many times in the last 2 weeks I've seen the chart of energy versus technology stocks, the ratio.
Mm-hmm.
And all of these, newfound market technicians are showing this chart and saying, oh, look at how far energy has fallen relative to technology over the last 15 years. And now we're starting a new secular bull market in energy relative to technology. And, everyone should go out and buy oil producers and that sort of thing. Right.
Mm-hmm.
And if it's true, if you look at that chart, we've gone, 3 standard deviations from where we were 15 years ago, and now it's starting to turn around. But here's the problem that I see with that. So twofold. Number one, the people who've owned energy so far this year look really smart, and they're feeling self-congratulatory. And there's a lot of sympathy for that narrative that you want to be in energy, that's the place to hide. And just like the consumer staples, you know, if there is one final group that has yet to be taken out and shot as we head into a, potentially a significant US recession, then energy really is the last man standing. So
Mm-hmm.
there's sort of sentiment risk there that I think is kind of interesting. Um, but the other thing about that narrative that I find really troublesome is, it's clear that people put that up without actually looking at the underlying fundamentals. And this is what's really helpful about being stock guys and top down guys, because you're digging into individual companies and the accounting and all the nerdy FIFO stuff that I've mentioned before. But then you're putting the pieces together with the big picture stuff, which is why our partnership works so well. But in this case, if you look at that energy versus technology ratio over time, okay, it's 3 standard deviations away from where it was. But at the same time, um, you have to remember energy companies have not grown at all for the last 15 years. So if you look at the invested capital in ExxonMobil's business, or just look at the property, plant, and equipment on ExxonMobil's balance sheet, that's gone nowhere for over a decade. And, that matters because that's a constraint on how much these companies can generate. And yeah, maybe if oil goes to $300, as some people are predicting, then you get, extraordinary earnings to some extent. But the notion that you can have, this massive secular bull market without laying out capital to grow your business is, I think, really flawed. And on the other hand, a lot of these big tech companies were very overvalued. They were perceived to be sort of bond proxies, and that's being called into question now. Um, but Google trades at 10 times EBITDA today. How much more mean reversion between Google and oil companies are you going to get? Whereas Exxon as a multiple of sales is trading where it was in 2006, 2007. So there's just not a lot of, like, the elastic band has already been stretched. Um, and a lot of people are looking at that chart and saying, oh, well, energy stocks could triple from here and you'd still only make up half the ground lost to tech. I don't think it works that way when you really think about these things as businesses and not just a line on paper.
Yeah, or as a proxy for oil prices. I mean, the only argument for those sorts of companies to triple in value is if the price of oil triples. And I mean, I understand now why you were asking me about that yesterday, because I mean, there are scenarios where that's possible, I guess. But I've never kind of bought the doomsday scenario that even today there's not enough um, sort of supply in the market. I mean, and oil is the one I've always been least worried about. Like when you actually put the pieces together with oil, I mean, it's a logistics problem, it's an infrastructure problem, there's political ideology problems, but there's enough oil out there if you can really just get everybody pushing in the same direction. That's not as true for natural gas with what's going on with Russia and Ukraine, and that's not as true for coal in particular. But yeah, I think the intelligent side of that argument is the notion that oil really can go to the moon, and it hasn't yet. It hasn't yet, despite people calling for it for the last 6 to 8 weeks. It doesn't mean it's going to happen, but um, I think we'd need one or two pretty large catalysts to get there, at least out of this 110 range that we're in right now.
Well, I'd like you to talk about that a little bit because I'd be interested to hear your thoughts on the balance in oil markets because I guess three data points come to my mind that I'm trying to weigh. The first is China has been locked down and now they're not, or they're moving to not. And that's definitely, a bullish factor. On the other hand, the US has been ripping and is experiencing a significant slowdown. So you have, an asynchronous macro cycle on both sides, US versus China.
Mm-hmm.
But then, okay, how do you think about that? What is Mr. Market telling us? Well, when I look at all industrial metals, steel, zinc, aluminum, um, copper, all of those prices have rolled over very sharply in the last month. Um, Mr. Market seems to be telling us that the industrial metals markets, at least, are pricing in slower demand. Um, and yet oil, it's sort of consolidated above $100 if you look at West Texas crude, um, and hasn't confirmed that. So how do you think about balancing all those factors?
Yeah, I mean, it's also hard to separate China from that because when China stops consuming, all of those commodities start to go down. And to your point, and I mean, there's been so much talk about China in the last couple of weeks that doesn't make any sense to me. I'm sure you saw the thing about JP Morgan calling China uninvestable 2 months ago, and then this week or last week or something like that, recommending a bunch of Chinese tech stocks. We can circle and come back around to that. But the way that narrative flips so fast is also interesting to me. But in terms of the balance in the oil market, I mean, when we started the year, basically we were looking at consumption that was a little bit more than what OPEC Plus was going to be able to produce. OPEC Plus, for the first time in, I guess, for the first time in my career since I've been doing this, it wasn't a prisoner's dilemma within OPEC about who was going to cheat the quotas and who was going to pump a little bit more than what they said they were because they wanted a little bit more cash. It was literally the countries couldn't pump the oil quotas they said because Nigeria was a mess and Libya is a mess and Saudi Arabia was maxed out and Russia, obviously what happened with Russia there. So we were in the situation where it was a little bit unbalanced and you saw countries dipping into their strategic reserves to try and keep the price at least somewhat manageable. And I think we're still there. I think we're still assuming China comes back online a little bit. They've reduced community spread in Shanghai, so hopefully they're going to get back to sort of normal operations. I saw they imported a big old ship from Iran this week of oil, and they're adding that into their strategic reserve. So that tells you something about kind of what they're thinking about for the long term, or even for the short to medium term, I guess I should say. But yeah, I think there is still that little bit of unbalance. I think that overall demand outpaces the supply that is on the market right now and is going to be on the market for the next 3 months. But if you kind of look around the corner, and I mean, I've been talking about the Iran nuclear deal long enough now to where I'm doubting my take on the Iran nuclear deal, but it's sitting there. And if you add Iran back to global markets, that's a big deal. I've been hearing a lot of stuff just in the last week about the United States and Venezuela finally moving forward and at least getting some Venezuelan oil back on the market, removing that limitation on the market. So if you start to put the pieces together, it's not that hard to scrape together, I think, the necessary oil to meet demand, especially if we're going into demand contraction. The flip side, of course, is, and this is the sort of New Orleans post-traumatic Ida syndrome in me, like all it takes is one Atlantic hurricane to blow up that entire thesis and send oil another $50 or up above. So, but that's where I would see the market. I think it's balanced fairly precariously, and it's a little bit short. But I think that there's enough space, there's enough growth contraction, there's enough demand destruction, there's enough stuff happening that I don't see the most likely scenario as being that leg up jump in prices.
And what are you thinking about China more generally? You mentioned JP Morgan and what they said. What is your view right now? How has it evolved in the last month?
I mean, I'm still fundamentally bullish on China. I mean, you brought up Tencent to me when we were prepping for the podcast and their really bad revenue number. But everything I see out of the Chinese government is they are telegraphing that they've got things under control. They're telegraphing that they're not trying to punish their tech companies. They sat down with all the tech companies again this week and sort of, said they were working with them. They've been, approving more fiscal stimulus measures than they did in 2020 when the pandemic really got going. I think the narrative about China is also fairly strange because I think, especially in the West, we just don't give a shit about COVID anymore. Like I was just on a transatlantic flight. I was the only dude wearing a mask. I'm hearing even here in Switzerland, like nobody's wearing masks. It's kind of amazing. It feels like things have sort of completely turned, and that's just not where China is.
Those risk-loving Swiss. Swiss nature.
Yeah, although the funny thing, and here, if there's a U.S. government official listening to this, please fix this. You need a negative COVID test to get into the United States. I had to go to a pharmacy here and get a Q-tip shoved up my nose, even though in the United States nobody's wearing masks. We haven't cared about this stuff for literally months. Like it's literally the most COVID-free zone probably in the entire world. But I need a negative COVID test to get into the United States. I love the double standard there. But I got on that tangent because that's just not where China is. China doesn't have an effective vaccine. They have a really old population. They've actually had a lot of trouble getting vaccine in arms, which is a really interesting thing. Usually when China decides to do something, it doesn't. They haven't been able to get vaccines in people's arms, even the crappy ones. So that sort of tells you something as well. And they can't afford to have their healthcare system completely overwhelmed and have tens of millions of old people die under the Xi Jinping regime. So this idea that China's trying to screw the global economy by shutting things down. No, they just have a really weak healthcare system and a really old population, and they have to lock down. They are concerned about people's lives, and I think they're concerned about the legitimacy of the Communist Party. If a bunch of people die from this virus, I don't see that as a way to kind of go at them. So if they can get that under control, they should be able to not only should they be able to, they need to get all that growth back because they were counting on that in general. It's also one of the reasons I'm here in Geneva, this week, the US and China and the WTO are negotiating about some kind of deal for ending some of these tariffs or temporarily pausing some of these tariffs or trade deals, things like that. And the United States is saying they don't want to give China a waiver on intellectual property laws on vaccines. So China's like, hey, give us the Pfizer patent so that we can manufacture the stuff in China and get people back into factories. And the United States is saying, no, we're not going to do that. which has been confusing to me because A, they're going to steal it anyway, so you might as well give it to them. And B, if you really want to get inflation down, what you want is China to be producing again. And the quickest path to getting China producing is giving them a vaccine that actually works. So again, like the U.S.-China relationship just causing problems throughout the sector. So those are my thoughts right now on China. If they can get COVID under control, if ending community spread in Shanghai is a sign that it was really a Shanghai problem, and the rest of the country they're going to be able to get things under control, and Omicron's not going to kill them. Like, in the next 2 or 3 months, we probably should see an improvement of the situation overall, and in an environment where they've just passed all this fiscal stimulus, which should mean lots of growth and good things for a lot of the things that have rolled over in the past couple months.
Mm-hmm. Now, I remember back in 1819 when the trade wars were, very much at the top of the news cycle, that you and Marco and a few other people made a contrarian call, which turned out to be totally right, which was that the United States is not going to decouple from a trading standpoint from China, and that China has no real incentive to close down its capital count any more than it is, because it wants access to foreign capital and needs access to foreign capital. Has any of that changed in the recent period? I see there's this bill that's trying to make its way through Congress around building American capabilities specifically to compete with China on tech and other areas, which has taken longer than expected. What do you think are the political what's the political dynamic to get something like that through? And do you see that continuation of that 1819 trend where U.S.-China trading relationship just keeps chugging away behind all the jaw?
Yeah, I think it's still true for China. I think the U.S. is the more volatile partner in the relationship. And I'm not sure the U.S. is quite certain what it wants. There's also different factions within the U.S. and different factions that the U.S. is okay with trading with China and some that they don't. So the U.S. government is really concerned about technology going to China. So they want to limit technology going to China. But they absolutely need and want China to buy more U.S. agricultural products. So that's why the entire sort of Trump trade deal with China was about, okay, China, like import a bunch of these agricultural commodities, but we're going to sanction Huawei and all this 5G tech, and we're going to try and find some sort of middle ground there. And I mean, China, we're going to get numbers on their harvest here kind of coming up. They are getting more and more dependent on food imports. And there's just, because of the drought in South America, because of the Russia-Ukraine war, there's just not enough out there from their perspective. So they want that access to the U.S. agricultural commodities, but they want access to the U.S. in general. We're going to see just how serious the Biden administration is about China. They've been promising a top-down review of strategy on China since the day Biden got into office, and literally not much has changed. The only movement we've seen is that in the last couple of weeks, they, extended some tariff waivers, which I think, again, is a nod to the White House is starting to get a little bit more worried about inflation and about the domestic U.S. economy than it is maybe about great power competition. But the flip side of that is that, the Republicans are probably going to take one, if not both, houses of Congress in the upcoming midterms. And when the president of a party loses his majority like that, such as it was, I don't know there was such a great majority for Biden in the Senate. I mean, Manchin and Sinema basically made that not a very good majority in the first place. But that's usually when presidents decide to focus on foreign policy. So if the Republicans, as expected, do take one of the houses of Congress and you get a divided U.S. government, I would expect Biden to probably double down on foreign policy issues. And I think in practical terms, that probably means anti-China stuff, anti-Russia stuff. And what seems to be percolating is, mending fences with Venezuela, maybe softening some restrictions on Cuba, thinking more about Mexico and about North America and South America, and things like that, and strengthening the transatlantic alliance. I think we are going to see a shift from the Biden administration to foreign policy once he loses his Democratic majority, such as it is.
Let me make a historical comparison, and you tell me if you think it's bogus, okay?
Okay.
So I recently read this book called A Preponderance of Power, which is a terrible title, by Mervyn Leffler, I think is the name. And
Mhm.
as a brief aside, the book was published in 1990, I think, and it literally has the most ugly book cover I think I've ever seen. I'm embarrassed to have the book even just on the kitchen table because it's just so hideous. Um,
Wow.
it looks like a New Kids on the Block kind of thing. Anyway, so the theory of the book is that, and I don't know if I believe this, is that the Truman administration, in the 2 or 3 years after the war, very much overreacted, and uh, uh, sort of fabricated the Soviet Union as not just a strategic competitor, but an existential um, threat and sort of almost a spiritual competitor, and really elevated that far beyond what it needed to be, um, and for mostly domestic political reasons, um, because the administration was unpopular. They wanted to draw attention to foreign affairs and less so domestic. All of those things that I'm sure you know.
Hmm.
How likely is it that we get a similar manufactured um, mania in the next few years if you see a weak Biden administration for the remainder of its term? The Republicans obviously are you know have a different policy toward China more generally. Could we see a repeat of that, where even if China, as you say, doesn't have the incentives to cause that relationship to deteriorate, that we're going to basically do it ourselves without provocation necessarily?
Yeah, well, about the narrative, I mean, hindsight is 2020. It's easy to say that in hindsight. At the time, I mean, like nuclear weapons were brand new. And once the Soviets got nuclear weapons, I think it scared the crap out of everybody in the West. And when you had the Iron Curtain descend across the European continent and the Soviets, I mean, I think that really was a true ideological bipolar conflict. We know now that Russia was not nearly as strong as it was projecting, and maybe we could say that maybe U.S. intelligence, which was still fairly young at that point. I mean, we forget that U.S. intelligence agencies really came alive for the first time in World War II, maybe a bit in World War One. So, but I don't think we have to go to the Soviet Union for the metaphor. I think for China after World War II, the United States absolutely did that. The whole reason the United States was in the Korean War was because of what happened with China. The United States had supported the wrong, I shouldn't say the wrong side, but supported the losing side in the Chinese Civil War in Chiang Kai shek. And when he went to lick his wounds and sort of set up shop in Taiwan as a petty dictator, the United States decided that China, even though China had its problems with the Soviet Union, was also an enemy. And the United States got into the Korean War because they were worried that it was a Chinese attempt to take over the Korean Peninsula. And behind it all was actually Stalin was the one pulling the strings, and Mao wanted nothing to do with it. He was furious with the Soviets for encouraging the North Koreans to invade anyway. So I say all that to say that I think that China has always been a blank canvas that U.S. foreign policy experts have just sort of painted on depending on the fears of the day. I think the United States has always looked at China as a country of great potential and admires parts of China, but then is also scared of China because it's really the one country in the world with the population and the size and the sort of human capital to actually compete with the United States. None of the countries that the United States competed with in the 20th century, whether it was Germany or the Soviets or Japan. I mean, these were all countries that were much smaller than the United States, that had obvious constraints that were going to make it clear that they weren't going to be able to, maybe they could conquer parts of Europe, but they weren't going to come across the Atlantic and invade the Bronx or San Francisco, right? But China was the one I think that people always thought could. And the narrative on China has flipped. And some of that is China's fault because China's beating its chest and doing a lot of things and not cooperating and talking about the bigger role that it wants for itself. And I think some of it is the United States likes having a boogeyman. And so we got rid of 9/11 and the endless wars in the Muslim world. And we need to jump right back into great power conflict. And China is the one that is sitting there. And I think you see that up and down both the Trump and Biden administration. I mean, they use extremely strident language to talk about how bad China is, like you said, spiritually, ideologically, economically, politically. I mean, I've heard US government officials describe it as a war. It's not a war. Like the whole point, I think, of policy should be trying to prevent a war happening between them. So, no, I'm very pessimistic from that sense. I mean, I think both sides are tone deaf to each other and are getting more tone deaf towards each other. And the exit ramps for averting conflict in the future are rapidly disappearing. So I think that'll happen in the US, and I think it's happening in China too. And I mean, to your decoupling point, I mean, the reason decoupling hasn't happened yet and is not going to happen anytime soon is because both sides can't afford to do it. But both sides are now furiously trying to race to a point where they're not dependent on the other. And whoever gets there first is going to decouple or is going to use that economic leverage against the other one to try and get what they want. So right now, though, we're in that race where both sides are basically rebuilding their own supply chains, trying to become self-reliant on themselves for technology or manufactured goods or whatever it is. And that's why I think it's a great time for both the US and Chinese economies. That's a massive stimulus if you're basically getting rid of all the dependence that you had on it before and you're trying to recreate those things either in your own country or in countries near you. So that was a long-winded answer, but that's what I got for you.
No, but it was a good answer. I was wondering about this recently. Like you mentioned how the US always needs a boogeyman. I mean, maybe this is just a banal observation, but do you think it's true that that's just a function of um, our geographic position? You know, I think a few weeks ago we were joking about how my French wife always makes fun of me and says Americans are clueless about the world and are totally wrapped up in themselves, and you don't even know who won the Eurovision Song Contest, and you know, all of this sort of stuff. Um, but but that we're just far away from it all, and yet we, you know, want, or at least, you know, the policymakers want us to play a global leadership role because, you know, it's good for the world that we do. And do you think that we need to constantly manufacture boogeymen in order to get public support to act in an international way, or is that, you know, oversimplifying it?
Yeah, I mean, that's a great question. I'd be curious about what your response is. I spend a lot of time thinking about that. But before I give you my answer, the idea that the French are going to tell Americans that we're the self absorbed ones, I find that very rich, almost as rich as a triple cream brie. Um, but zing. But in terms of like the boogeyman thing, here's my working hypothesis. I think it's part of. I think it has to do with two things. Number one, I think it has to do with all democracies suffer this. So democracies are inherently less unified than authoritarian regimes, and that can have both strengths and weaknesses. I think in the long term, the strengths have been abundantly clear. But if you're in the short term and you're trying to do some kind of policy or you're trying to make a change, it's really difficult. And one thing that having a thing that you are fighting together, whether it's an idea or a country or something else, that is a way to bring people together in a democracy in a way that you might otherwise not be able to. So when you have that boogeyman, you can do things and you can marshal resources as a country in a democracy that you aren't able to do otherwise. The other thing, and I think this is what makes the United States different than most other countries, is that the United States is not a traditional nation state. So, for instance, France is a democracy, but France is also for the French. And there is a very strong idea about what the French nation is and what it means to have French blood and what that means in terms of citizenship. And they all speak this language, and there's this shared, 1,000-year history, culture, blah, blah, blah. The United States doesn't really have that. We have elements of that, obviously, like we have a common language, but the United States really is a fairly young country. It doesn't have that kind of national identity. Um, the natives of the United States, or the natives that were on the North American continent when the Americans, or how to say that, when the colonists got there and they brought their smallpox and their alcohol and all the things to the North American continent, everybody died that was there. So there is nobody who has claim to the land as being there longer than anybody else. It's a nation of immigrants, and it's still a nation of immigrants. People come all the time. So we don't have that kind of natural ethnic unity, I think, underlying things. So it's the combination for me of democracy plus lack of a strong notion of nationhood, which means that we like to define ourselves in opposition to others. We like to be the good versus the evil. We want to be the shining city on the hill. We want to be, the new republic for the ages, which is the Rome. We're going to be that the Rome of modern times, and we're going to be the real exception. I think that's where some of that comes from, but some of that may just be me trying to justify it. What do you think?
I don't know. I can see both sides of the argument. I mean, I laid out the one side, which is, yeah, we need boogeymen because otherwise the equilibrium is to not engage and not marshal the resources you need to be the world's traffic cop, or however you want to describe that. But on the other hand, I think that's right. It's not a, it has to be pretty false for the reasons that you laid out, because we don't have a real ethnic identity as a nation, and it's not, a competition between peoples, and especially the zeitgeist is very much against that, you know, um, stereotyping Chinese because of, oh, they're Chinese. I think that's going to be a very tough sell in a way that maybe it wasn't about the Japanese 75 years ago.
Mm.
So I can see that flaw in the argument. The other thing that I think about is, the U.S. is, as I think Calvin Coolidge said, the business of America is business, right? Was it Calvin Coolidge? I'm mixing up my
That sounds like something he would say, but
mixing up my mediocre presidents here. Um, but just this idea that really commercial interests are paramount, and that the U.S.'s position in the world is really designed to ensure, open sea lanes and open trade, and all of these sort of background functions are working well for American commerce. And, with China, it's so tricky because, yes, they're a strategic rival, but also our supply chains are intertwined with theirs in a way that is just extraordinarily difficult to extract yourself from, and probably not desirable. There's a massive amount of human capital and expertise and savoir faire, or however you want to describe it, that's been built up in China, and it would be difficult to impossible to replicate those supply chains and interlocking suppliers and things like that. And I don't know if U.S. big business really wants to mess with that. So I can see that part of the argument um, as well. Um, I totally lost my train of thought here. Um,
yeah, no, but I think that's actually a good thing to close on, because in some ways it goes back to what we were talking about before, which is in China, the United States is actually facing a true litmus test for what you just talked about. Because if the business of America is doing business, you don't want to decouple from China. And what you're going to say is that, what, commerce and wealth and this system of values that we've created, it will eventually cannibalize all these authoritarian regimes. So let that money flood in. Let the Chinese people see what happens when you get all this kind of wealth, and eventually we'll reach some kind of pragmatic basis with them. That's been the narrative for the past 30 years. The idea was the United States looked aside from all the things it didn't like about China, but said, hey, we're partners, we're economic partners. A rising tide lifts all boats. We're not worried about the competition. We think that we're going to be able to sidestep those things. And for both sides, that's just not true anymore. Both sides now see each other as the competitor. And in some ways, what the US is doing with China is saying, okay, the business of America is doing business except when we register an existential threat. And China has grown rich enough now that we think they're the existential threat. And China looks at the United States and says, hey, I thought this was the whole plan. I thought we were going to get rich, and that then we were going to be kind of equals, and we were going to maintain this global stability together. Why are you killing the champions of Chinese industry like Huawei for doing the thing that you told us to do in the first place? And they view that as evidence that the U.S. is not a good faith actor and isn't actually interested in free trade and open sea lanes and all these other things, but about making sure everybody toes the American line. It's free trade, as long as the United States gets all the benefits of it. So I think that's part of where the disagreement comes. And for me, the depressing part of this is that we're not, the media narratives, and this is both sides, are not about that disagreement and how to get through it, it has been suffused with oh, they're evil, or oh, they're trying to prevent us from getting what's ours or what is legitimately ours. Those narratives taking place on both sides is a bad sign, because it makes it very hard to actually cooperate in the areas where we could have interests in common. So,
Well, I guess I have one final question to ask you, just moving along with that thought. How
mhm.
much scope is there to speak out of both sides of our mouth, do you think? So, like right now, Europe is rushing to try to decouple their energy dependence on Russia. And, all of the talk is very negative, but the underlying fact remains they're not going to shoot themselves in the foot. Um, and that's more of a longer term strategy to move in that direction.
Mhm.
Um, lots of countries throughout the world speak badly about the US and call us the great Satan and whatever the local epithet is. And yet the elites are happy to do business with us and send their kids to American universities and, enjoy all the benefits of the globalized system and that sort of thing. In the
Mhm.
opposite direction, how much leeway do we have to basically bad talk China and get political points, and yet not really do too much to change things from a trade policy perspective, um, or try to uproot the existing supply chains, or try to close down the capital flows to the extent that they exist, or the capital account, and really just focus on kind of technology standards and things that are very visible, but not necessarily the main event right now.
Yeah, that's a good question. I mean, the U.S. is not powerful enough to have everything that it wants. So it can do what you're talking about if it is willing to be less self-righteous and ideological about its support for other countries that are going to join in this quest. So if you think China's the problem and you want to reach out to these other countries and you want them to be part of the globalized system, you're going to have to be okay with dealing with a regime like the Maduro regime in Venezuela. You're going to have to figure out some kind of way to deal with Iran and with Turkey and some of these governments that have kind of noxious regimes. Now, the United States has done this in the past. Our top ally in the Middle East, much to my chagrin, continued, or until recently, was Saudi Arabia. So, like, there is a propensity and a realpolitik to U.S. foreign policy historically to do this kind of thing. But since the collapse of the Soviet Union, the boogeyman, if you will, for the United States was, we're going to make everybody into a liberal democracy, and we won the Cold War, and everybody should be like us. And that's why you get some of this ideological grandstanding. So I think what you're saying can happen, but we're going to have to shift away from expecting everybody to like our values at the same time, because a lot of what we've been doing for these countries is, we're not pragmatic about it. And the thing that the Chinese have going for them is that they don't care about politics or ideology. All they care about is, we want the money, or we want the resources. We'll build the port. We don't care who your president is, what his party is. Like, as long as you kowtow and you send us the things you said you were going to send us, we're fine. There's space for the United States to do this if that's what the United States wants to do, but it can't have everything. It's going to have to choose what it wants. And right now, the United States is trying to have everything.
Having everything is the American way, just as a reminder.
Yeah, well, I don't know.
This is the
I don't
land of
know.
Amazon, damn it.
Oh, is it? I think Brazil has something to say about that.
No, not that
All right.
Amazon.
Yeah, with that crappy joke aside, do you know what Jeff Bezos was originally going to call Amazon? Have you heard
What was
this?
he gonna call it? No.
I think he was going to call it Abracadabra or something, or Abra, and then somebody told him it was really bad, and they picked Amazon instead. Wonder how life would be different if he'd gone with that name. So,
It's funny, you see some of the outfits that he wears, and you can see how he would think abracadabra is a good name for his business, He's just an
yeah,
abracadabra kind of guy.
I hope I'm remembering that right. Jeff Bezos. If I got the name wrong, I apologize. I think you'll get over it. So,
It's all right. I'm pretty sure Jeff
um,
Bezos won't be listening to this.
yeah, probably not. So, all right, Rob. I think we're good. We somehow stayed away from civilizations of ancient Sumeria for this podcast. We'll have to revisit them next time.
Well, I do have some theories about ancient Babylon that I want to get into next time, but we just didn't have the opportunity today.
Yeah. All right. Well, listeners, you have that to look forward to, and we'll talk to you soon. Cheers.
See ya.
Thank you so much for listening to the Cognitive Dissidents podcast, brought to you by Cognitive Investments. If you are interested in learning more about cognitive investments, you can check us out online at cognitive.investments. That's cognitive.investments. You can also write to me directly if you want at jacob@cognitive.investments. Cheers, and we'll see you out there.